just how quickly it's happening and how significant it is. As recently as this weekend, a group of 50 of us went up to Fort St. John and Dawson Creek for the weekend. People flew in on a Saturday, and we spent all day Saturday and all day Sunday. We met with the mayor, a couple of the economic development people, one of the top property managers in the city, and a number of realtors. And what's happening right there right now is it's almost getting to the point of being unbelievable. No problem. So almost 20 years ago, we invested in Fort McMurray. We bought 250 properties in Fort McMurray, and they were sort of the old style. They had orange shag carpet and turquoise toilets. And we bought them for about $39,000 a suite. We sold them a few years later for about $51,000 a suite. Thought we'd done extremely well. And about 2 months ago, I got a letter in the mail or an email from a broker saying we have this property in Fort McMurray for sale, 250 properties at $251,000 a suite. So, that was quite shocking what's happened up there. The average two-bedroom rent in Fort McMurray now, as most people know, is somewhere in that $2,200 to $2,600 a month range. And so, it's the kind of rent increase you can see, 15, 20 years ago, those were $700, $800 a month rent. Our investors have acquired almost 12,000 properties from us all over North America, California, Arizona, a lot of properties in Edmonton and Calgary over the last 15, 20 years. One of the projects we're particularly proud of as a company is we won the Georgie Award last year for the best residential community in BC. So as well as the properties that we buy and acquire, we do a lot of ground-up development where we build the entire project. And it's one of the opportunities in the north right now is because most of the investment properties that have been built there were built in the 70s and the 80s. And the people that are moving up there with good paying jobs just aren't prepared to accept paying, living in that kind of accommodation. So a lot of people are there looking for new properties. So that's what we've been doing. I think probably most people have read the headlines. Many people believe the natural gas industry in particular could be as large as the oil sands in Alberta. Really in northern BC, what's driving all of this is the fact that Asia needs the resources. They need the oil and gas, the agriculture, the forestry, and the mining, and a very significant amount of that is in northern BC. And, also in Alberta and Saskatchewan, but significantly northern BC. So really there's a resource wave that I think is an opportunity to really be able to ride that resource wave. And a lot of the growth that's happening in the liquid natural gas came as a result of the big tsunami that they had in Japan. And before the tsunami hit, there were 52 nuclear reactors operating in Japan in particular. And today, there's currently none of those nuclear reactors. There were two, and then on September 15th, they closed them. But as of today, there are no nuclear reactors operating in Japan. So to a significant degree, they've made a significant investment along with China and Korea in building liquid natural gas facilities to receive natural gas from around the world. And, there's big debate, if you follow the news, there's big debate as to whether they will reopen the nuclear facilities that they have there. The people of Japan are not big fans of it. And so, one of the things that this is leading to is it's leading to a real critical supply shortage in Asia. And so in the last 3 to 5 years, there's been a massive investing in Asia to build facilities that can receive natural gas. And the way it works is that the natural gas is, it comes out of the ground, it comes out in a gas form, it's shipped out to the coasts of the countries that export it, and it's put on these big tankers in a liquid form. They then ship it across the ocean in liquid form, and then once it lands in Asia, it's converted from liquid form at these liquefaction facilities that are built on the coast, and then it's shipped again by gas form all throughout the countries. So if you look at these little red dots that are on the screen in Japan, China, and Korea, each one of those red dots represents an LNG facility that has been built or built or being built in Asia to receive liquid natural gas. So there's, very, very significant monies. Almost $50 billion has been spent overseas to receive those facilities. These are the typical tankers that ship the natural gas. And actually, when it arrives in Asia, it arrives in these tankers in liquid form. And when they convert it to gas form, it's about 600 times more gas once it's in gas form. So it's quite expansive once it gets there. And right now, the big countries that are shipping to the middle to Asia are Qatar, Malaysia, and Australia. Most people think today, when I ask the question at events, I say, how many people here think Canada is already shipping? A lot of people believe that we're already shipping, but as of today, the infrastructure in Canada is not in place. We're shipping none of our natural gas to Asia. And part of the excitement in Canada is that we have a sole captive audience. Our audience to ship gas today is North America, Canada, and the U.S. And we sell our gas for $3 to $4 a BTU. In Asia, they're paying almost 5 times for that same gas. So there's it's a bigger market, number one, and number two, it's a market that's paying much more money. Obviously, if you followed the news, you know that the current government has really jumped on the bandwagon. They really see this as, one of the ways to really spur the economy, and so they're really behind this plan. And one of the big reasons that China has jumped on the bandwagon is that in China, about 60% of all their energy is generated by coal, and the air pollution has gotten so bad in China. This picture was taken in Tiananmen Square, where it's gotten so polluted that they are broadcasting sunrises on a giant screen TV in Tiananmen Square. So, that's a little bit of a sad testament, but, again, there's getting to be a big uproar there with the people because the pollution's so bad, and they're just looking for other alternative energies as well, something different than the coal. So what about us? In BC, we have what is believed to be 150 years supply of natural gas. We have what is believed to be 30% of all the natural gas in BC, 30% of all the natural gas that's in North America. So that's a massive, massive field. The two areas, one is called the Horn River play, and the other one is called the Montney, are massive, massive plays. In Canada, who you've probably seen their office downtown, and Canada has an acreage out near Dawson Creek in Fort St. John of almost 1.2 million acres. So very, very significant amount of gas in BC, and most of the gas is centered around two towns, Fort St. John and Dawson Creek. Fort St. John has a population of about 22,000 people. Dawson Creek has a population of 11 or 12,000 people, and they're about a 40-minute drive apart. So really, all of the activity for the drilling and the finding of the gas is really around these two areas. So again, if you followed the news, what you've seen over the last, probably starting about 2 years ago, there were, almost monthly, there's been an announcement of another LNG facility applying for an export license. This chart shows 6 or 7 of them. There's actually 12 applications that are in for LNG facilities. 7 of them have applied for export licenses. One of the largest ones is in Kitimat. They currently is Chevron, and they currently have 800 employees working right now in Chevron in Kitimat, and they're expected to spend about $800 million this year just to try to get to the point of a final investment decision. The biggest change that's happened in the last 18 months is that it's really brought in all the big players. If you're not a big player, you're really not in the game. It's the Shell, it's Chevron, it's Exxon, it's British Group. On the left-hand side, you can see Petronas. That's the Malaysian state-owned energy company out of Malaysia, and they've committed $36 billion to LNG development in BC. So very, very significant players. And obviously the projects they're proposing are very significant. As I mentioned, the Kitimat LNG is about $4.5 billion. They're looking at having spent about $800 million by the end of this year. The next facility, and this is their site in Kitimat. The next facility is the Shell. They've partnered with Mitsubishi KOGAS. KOGAS is the Korean state-owned energy company, and they've also partnered with PetroChina. So part of when you see a big consortium like Shell, part of why they've partnered with these other entities is so that they can have some control to make sure that they have supply, because the biggest part of the arrangement is going to be a 25-year contract with these companies and these countries to receive the gas. So this facility is going to be one of the largest private projects in the history of BC. And then you've also got Petronas. About a year ago, Petronas bought Progress Energy out of Calgary for $5.5 billion, and they've now partnered with JAPEX, and JAPEX is the distribution partner to distribute the natural gas in Japan. And then, of course, Spectra Energy and British Group, another $10 billion project in Prince Rupert. And all of the gas and all of it comes from Fort St. John and Dawson Creek. Big players in town, Canadian Natural, Encana, Shell, Petronas, Progress Energy, and the list up there just goes on and on. So one of the things that's happening is because these facilities are being built, or being proposed to be built, they have to prove out that they have the reserves to provide these countries 25 and 30-year supplies. So there's a big jump right now in the service companies going in there, drilling more wells, proving out the servicing. Big jump this year in that. And the expected investment, Petronas and Shell have announced that they're looking at 750 new wells over the next couple of years, $4.5 billion. And Encana is looking at 80 to 85 new wells, about $1 billion, $1.7 billion. And then on top of that investment, 2 of the 5 pipelines, the natural gas pipelines, are already in place, but 3 more are proposed. Those 3 facilities would take the gas from Dawson Creek and Fort St. John out to the coast, to Kitimat and Prince Rupert. There's actually a couple of smaller LNG facilities. One is being proposed as well, and these aren't even really in the news yet, but one's being proposed for Campbell River, one's being proposed for Port Alberni, and another one's being proposed for Squamish. But at the end of the day, all of the gas comes from where the 2 main areas, the Warren River Basin and the Montney Basin, right outside of Fort St. John and Dawson Creek. And these pipelines are a big deal. Each one is about $4 billion. They're certainly not as controversial as the Northern Gateway oil pipeline, because one thing with natural gas is if you do get gas leaking into the air, the gas dissipates into the air. It's not like oil where it goes into the rivers and the rivers and the bog, I guess you will. And then on top of that, it's not as controversial because this is a BC resource. So really what we're doing is we're shipping a BC resource within BC. I think a big part of the controversy with the oil and Northern Gateway is the fact that it's a deal that's going to have to be struck between Alberta and BC, and it's also oil. And what's interesting is, if you look at the date on this article, so it was really only sort of June that Exxon joined the race, and they got a 25-year export permit. Again, it's really becoming kind of the big players are there. So on top of the LNG in the bottom right-hand corner, which is, depending on how many of these facilities go ahead, is projected to be anywhere between about a $50 and a $250 boost to the economy. You've also got billions of dollars being invested in forestry and in mining in what's happening in northern BC. Specifically, the capital spend that's being proposed for the Peace River region up in Dawson Creek and Fort St. John is a massive number. Again, and over the next couple of years, it's sort of in that $50 billion range. So if you look at it, it's really broken down over 3 things. The light blue at the bottom is the drilling. So you can see that in 2013, there was about $2 billion spent on drilling. You can see how that's going to grow sort of to 3, 4, 5, and then almost stay at that $3 billion number for a long time. Then you've got the spike, which is the export terminals, and this is only assuming that 3 of the LNG export terminals go ahead, and then the silver at the top, you've got the pipeline construction. So you're sort of right at the beginning of a very, very significant number. This came out of the Globe and Mail about 10 days ago. This graph was in the Globe and Mail. And so, like I said, we were up there this weekend, and you sort of say to yourself, well, if you're there and you're on the ground, what's really happening? What's significant is 6 months ago, the brand new Shell office opened. They have about 180 people in this office. They have about 800 people in the region. And the word on the street is they're looking for another facility to house, because they've got a very significant expansion plan coming. On top of that, you've got Talisman Energy. Again, what's impressive to me is that each of these buildings are brand new. Both the Shell, the Talisman, and the Canadian Natural Resource Building have all been opened in the last 6 months. So it's not like they've been there and this is happening. This has been going on and on. We're right in the middle of this happening, kind of right before our eyes. Again, there's the Canadian Natural Resource Building, and I don't have a photo of it, but right next to that, the BC Oil and Gas Commission just built a beautiful $30 million building. Where they're housing all their staff because they're dealing with all the applications. We went and talked to the local school board. Their estimate for numbers from what they've been told, because they're planning on adding, they would like to add 3 new schools in Fort St. John. Now that's significant because in BC there's only 4 municipalities that are over the next few years or even applying with the government to add new schools, and Fort St. John wants 2 elementaries and a secondary school. But they're building that because Shell has told them that they believe there's 4,000 jobs coming, and Canada 4,000 jobs coming, and BC Hydro 7,000 jobs coming. One of the things when we drive by, this is the brand new hospital. This hospital opened a year ago. So if I took everyone here to Edmonton and I drove you around Edmonton, there's 1 million people in Edmonton. There's 4 hospitals this size. Okay. And so for a city of 1 million people, they have 4 hospitals that are in the $300 million range. Fort St. John has a $350 million hospital, and there's 22,000 people live here. So if you think about that, somebody is obviously building not for what it is today, but for what it's going to be. Kind of a funny thing is when you drive around to the side of the hospital, the average age in Fort St. John and Dawson Creek is about 30. And the average income is about $79,000. So you've got lots of young people there. And since the hospital opened, they have a wing on the side, and they call it the birthing center. And they've had about 300 births in the first year. So on the cold winter nights in Fort St. John, I guess that's the recreation. So what we really try to focus on is, rather than figuring out the increased property values, but start at the bottom and figure out where's the real GDP growth. It's a very simple formula. If you find where the people are, where the jobs are, the people are going to move to. Where the people are going to move to, your rents are going to go up, and where your rents go up, your values are going to go up. And so sort of follow it from there. One of the things that we're doing, and this has the old dates on it, but on March 28th and 29th, we're doing a tour. It's a weekend. Cynthia has done this a number of times with her clients, and we all bring various clients. But people fly on a WestJet flight. We usually get the Saturday morning flight at 8:30 in the morning on Saturday. We spend the day. Usually we get the mayor to come and speak to us, someone from economic development, one of the property managers, usually one of the top realtors. And that usually takes an hour and a half. We have lunch, and then we get on the bus and we drive everybody around so you can see the hospital, see the big employers, drive to see all the things that are happening. And then typically then we stay overnight in town and in Fort St. John, and typically the next day we get up and drive to Dawson Creek, where we have finished product that we just built, townhomes and duplexes, so that you can actually walk through the finished product to see exactly what we're building brand new. And I'll talk about that for a second, the things that we're putting in that we think really set us apart in the rental market up there. So this was an example. You can see Cynthia dead in the middle there. Dawson Creek is it's famous for being mile zero of the Alaska Highway. So that's the spot everybody stops and takes their picture in Dawson Creek. I won't talk about it tonight, but Cynthia can fill you in as well. We have a program as well where you can invest your RSPs. So we have a nice simple program if you've got cash that you want to invest, but you can also do it through your RSPs. And in Fort St. John and Dawson Creek, we have a number of different properties you can buy. Again, our focus is that everything we do is brand new. We went up there and looked to find properties that we could renovate. Most of the properties, like I said, were built in the 70s and 80s. We bought one building and we did due diligence on it, and the construction was just horrible. Single pane windows, the roofs needed to be done, and the sliding glass doors just weren't good. So we made a commitment then that we really just were going to go buy some land and build some brand new properties that fit exactly what we're looking for. So this is, you can see the dot in the middle is the downtown of Fort St. John. And in downtown Fort St. John, the cross streets are 100th Street and 100th Avenue. And the blue property on the left there, we have 14 acres in Fort St. John on the corner of 108th Street and 102nd Avenue. One of the biggest things that's about to happen in Fort St. John, and it came up from the mayor again when we were there, is Site C Dam. And the Site C Dam is it's finished all of its review panels. They're going to complete their report. Their report is expected to come out sometime in the next 120 days. And upon completion of their report, it'll go to the government cabinet. And most people in town believe that they're going to have an announcement on the start of Site C Dam before the end of this year. Now, Site C Dam is a hydroelectric project. It's a $7.8 billion project, and it's expected to generate 33,000 direct and indirect jobs. When we asked the mayor, what are your biggest challenges as the mayor of Fort St. John, she said, every meeting they're having right now, they spend the majority of their meeting planning for what's going to happen when Site C Dam gets announced, because it's going to have such a dramatic effect on what's going there. And then in the next breath, someone said, well, is it going to be the biggest thing? And she said, when you look at Site C Dam relative to what's going to happen in the natural gas business over a 20 or a 30-year period, although Site C Dam is a massive project, $7.8 billion, it's really just going to be a blip on the screen when you look at it over a 20 or 30-year period. So that was quite interesting. On this particular property, we're building some condominiums, some duplexes. You see on the L shape on the left-hand corner there, we have 15 duplexes, which allow us to build 20 half duplexes. So we're building half duplexes, and on the interior lot, we're building some townhomes, which are exactly the same as the townhomes that we have built in Dawson Creek. So starting off with the townhomes, very simply, most of the people that have property up there, the parking stalls were designed by an architect in Vancouver, so they're designed for a smart car or a Miata. And no one there drives smart cars. They all drive big F-150 trucks. So we've put in extra wide parking stalls, and each parking stall, each two-bedroom property comes with 2 parking stalls, and each parking stall has an electrical plug-in. Again, in town, most of the properties, one of the problems you have is you rent a 2-bedroom, and it gets to be 30 or 40 below at night, and only one of you can plug your truck in. So having 2 parking stalls is a major advantage. This is what the properties, the 2-bedroom townhomes look like. They're 2-bedroom, 2-bathroom. They have a den downstairs. You can see in the left-hand corner downstairs, there's a little den. Upstairs, we have built-in washers and dryers in every suite, which is absolutely unheard of in town. They have a nice compact little kitchen, and then there's a little staircase that also goes downstairs to a 5-foot crawl in the basement. So you've got almost 500 square feet of storage. And storage is a big deal because everybody up north has tons of stuff. They've all got stuff that they want to store. So the storage is a big deal. Like I said, most of the properties in town are 2-bedroom, 1-bath. We really stand out with 2-bedroom, 2-bath. The washer dryer in every suite is really quite quite a big deal. We also put gas fireplaces in every property. Again, just another thing that really puts us apart. And as I mentioned, this is the kind of vehicle everyone drives. So when they pull up and see that we've actually got parking stalls that fit for their trucks, it's quite a big deal. To give you an idea, the local laundromat in town, if you want to do a load of laundry, it's $9 for a wash and $6 to dry your clothes. So, putting a washer dryer in, not to mention if you're up there and you're working a 5-day or a 6-day shift and you get a day off, probably the last thing you want to do is go into town to the local laundromat. So, again, a few things that really make us stand out. I'm not going to go through the unit pricing. I'm going to kind of leave that to Cynthia. The way it works is that if you want to purchase a townhome, you sign a reservation. That gives you 72 hours to meet with Cynthia to get a contract together. You would then put $15,000 down, and once the building permit is issued, you would put up the balance of your deposit, which is around another $25,000. We had a very, very good weekend, so a lot of the properties were reserved. So sort of going forward, we also have some duplexes in Fort St. John. These are a great duplex. They come with a 1-bedroom, 1-bathroom upstairs. Downstairs they have 2 bedrooms and 1 bathroom, plus a 4th bedroom that can either be used as a bedroom or a den or a flex room. So these ones are available as well. These ones rent somewhere in the range of $2,000 to $2,100 without a garage, and about another $200 a month with the garage. So you can buy these with or without a garage. Most people are buying them with a garage. The garage is a very, very rare feature and in high demand. So if you are thinking of a duplex, the garage is definitely has you stand out from what's available up there. We have 9 properties left in this tower. We're building a 5-story with underground parking. We will be the only condominium building in Fort St. John with underground parking, so it's quite a feature. These are sort of in the $229,000 range to $269,000, and these ones will rent. There's another building in town that's very similar to this, except they're 2-bedroom and 1-bath. Now we're gonna start construction on these in April, so you put a deposit down and these would close in a year from now. But the actual rents today on that other building in town are $1,400 to $1,550. So the different worksheets that we've run showing the pro forma on these buildings, we've run at $1,400 and $1,550 in rent, which is today's prices, not what we think they're going to be in 9 to 12 months, and also on the pricing with taken off comparing our units to 2-bedroom, 1-bath, whereas ours will have 2-bedroom, 2-bath, which we think we'll get a premium for. And then the underground stalls are extra; they're $25,000, and the property manager thinks those are going to rent somewhere in the $100 to $200 a month range. He was really excited to hear that we were putting underground parking stalls in, because they're always looking for something to market to the big companies, the Shells and the Encanas, for their executives, because when they're up there, one of the biggest problems these companies have is that they really want them in good accommodation, because they don't want them not wanting to stay up there because they're unhappy with the accommodation. As I mentioned, March 29th and 30th, we're doing the tour. So that's a Saturday and a Sunday. So if you're available, let Cynthia know, and she can walk you through. I think she's got a special program for her clients.